Hello, scholars. Can you hear me? Can everybody hear me?
Yep.
Hang on. Let me get my headset on. Hi, scholars. Can you hear me? Yes? Can you put a yes in the chat box so I know that you can hear what I'm saying?
Yeah, we can hear you.
Oh, I'm glad, because for a minute I didn't think you could. Just type in the chat box that you hear. This way I know who's at the meeting and stuff. Gives me a record. Just type your name. All right, so tonight, chapter 2, we're gonna backtrack because last week we talked about chapter 3. We're gonna kind of backtrack because I got an email from a student who was a little confused about over and under applied factory overhead. So we're gonna go over that, and we're gonna do exercise 2.9 on page 77. All right, but I just want to get my book here for a minute. So chapter 2 is about job order costing, where in a hospital may use it, or if you're doing, if you're a carpet installation company, you might use job order costing. If you're manufacturing different types of recreational vehicles, that was one of the examples, you might use job order costing. So let's, I just want to go through the chapter and point out some important things. Just want to see if there was anything in particular I had highlighted. And then I want to, before we start, I want to give you the answers to RA1 and RA2.
I think you already did RA1.
We could do it again. Let's do it again for those people who weren't here or whatever. Is that you, Harrison?
Yeah, well, what happened the other meeting? Because did you kick us out or something?
I don't know, Harrison. Talk to me after the class. We only got 60 minutes, okay?
Okay.
All right, so cost accounting systems, they measure, they record, and they report product costs. And we talked about the two main ones were the job order cost and the process costing. And this particular chapter, chapter 2, hones in onto job order costing. All right, so let me get my RA book out. This is an important this is an important in the chat. Let me just get some people in here. This is if anybody has their microphone on with background noise, could you mute yourself?
Okay.
Because it's kind of disturbing. Okay. So I'm going to put in the chat box. Let's see. Chat box, where are you? All of a sudden, I can't find the chat box. Okay. I want to type in this important calculation. It's called the predetermined factory overhead rate, which is on page 55. Now, most of you did the PQ2 and you did a fine job, but I just want to, this is something you should have, have in your notes. Predetermined, hang on, having trouble typing it. Predetermined, I'm putting FOH for factory overhead because it's just easier for me, equals estimated. Notice the term estimated, not actual. Total factory overhead divided by estimated activity base. Does anybody know, can anybody give me an example of a base that we would use? An example of a base? What's something we could use? What does it show on page 55? We could use direct labor hours as a base. We could use direct labor hours as a base. All right. So let me give you the answers to RA1 and 2. I'll just read them off to you. We're not going to spend a lot of time. And then next time I see you, because the exam is due this Saturday, correct me if I'm wrong, I will give you the answers to RA3 because some people haven't finished RA3, so I can't quite divulge that just yet. All right, let me just find RA1. Let's see. Okay, so RA1, which of the following statements is false? The answer is there is no overlap between financial and managerial accounting. There is no overlap between financial and managerial accounting. 2, in most business organizations, the chief management accountant is called the controller. I'm going to type it in the box. Controller, the head accountant. The next one, which of the following are the basic phases of the management process? They gave you they gave you 4 choices, and the answer is planning and controlling. Planning and controlling. Compute the conversion costs given the following data. So they tell us direct materials at $347,500. Direct labor is $196,300, and factory overhead is $187,900. And then they throw in selling expenses, which is totally out at left field for $45,290. The answer is $384,200. How did we get that? Conversion costs equal direct labor of $196,300 added to factory overhead $187,900. And that's on page 14 in your book. Product costs appear both on the income statement when they are sold and on the balance sheet as inventory, work in process, finished goods, raw materials. So they appear on both the income statement and the balance sheet. Product costs. 6, direct labor and direct materials are product costs and expensed when the goods are sold. They are product costs and expensed when the goods are sold. Okay, 7, they gave you a listing of numbers, cost of materials used, direct labor costs, factory overhead, work in process beginning, work in process ending, finished goods beginning, finished goods ending, and they want to know what's the cost of goods sold. If you take all those numbers and add everything and subtract the ending work in process and the ending finished goods, you will come up with 152,000. 152,000 is the answer. 8, the company manufactured 50,000 units of a product at a cost of $450,000. And it sold 45,000. So it didn't sell all 50,000, only sold 45,000 units at $15 each. $15 is the selling price. So if we times 15 by 45,000, we have revenue or proceeds of 675,000. If we take 450,000 divided by the total 50,000 units, what do we get? Let's see what we get per unit. 409. Oh, thank you. So 9 times 45,000, which is what we sold. We didn't sell all 50,000. Just bear with me. 9 times 45, 1, 2, 3. I got 4050, 405,000. So if we subtract 675,000 in revenue and subtract 405,000 in the cost, we end up with the answer, 270,000.
Okay.
270,000. 9. On the income statement's revenue minus expenses of a manufacturing company, what replaces purchases in the cost of goods sold section? So instead of purchases, the income statement of a manufacturing company has something called cost of goods manufactured. And that's on page 21. Cost of goods manufactured. Finally, which of the following would be least likely to be considered a managerial accounting report? Because most managerial accounting reports are internal and financial accounting reports are external. So which one of these statements are external? The statement of stockholders' equity. A statement of stockholders' equity. That's an external report. So that's least likely to be considered a managerial accounting report. The statement of stockholders' equity reports to the investors who want to invest in the company. Managerial reports help managers make decisions inside the company, but the company's information they will not share with the outside world because it might reveal things they don't want revealed. Okay, we're on RA2. Which of the following are the two main, let me just make sure, I think there's more people waiting. Okay, admit all, I think I got everybody. Which of the following are the two main types of cost accounting systems for manufacturing operations? This is what's in chapter 3 of your book, the first, that's actually the title, I think. Job order cost. And no, it's actually was in chapter 2 we just mentioned. Job order cost and process cost systems. Those are the two types of cost accounting systems. Job order cost and process cost systems on page 48. Which of the following businesses would job order cost systems be appropriate? An oil refinery, a lumber mill, a hospital, a canned soup processor, a shampoo manufacturer. Type in the chat box what you think it is. What do you think it is? And thank you for the answer, George. That's right, Angela. Very good. A hospital is the answer. A hospital uses the job order cost because maybe Angela is getting appendicitis, appendectomy. I think that's how you say it. And maybe I'm having a baby. I don't know. We're going to be charged differently. So we have to be charged separately. Job orders, different jobs. A job order costing and process costing are, believe it or not, that answer was in the first question if you look at it. Sometimes you can get the answers to other questions in the preceding questions. The answer is cost accounting systems. Job order costing and process costing are cost accounting systems. Question 1 was, which of the following are types of cost accounting system? And the answer was job order cost and process cost system. So it's the same thing, only kind of reworded differently. Which of the following is the correct flow of manufacturing costs? Well, think of your mother making a meatloaf. Does anybody not like meatloaf? Is anybody a vegetarian? You all like meatloaf? All right, I don't hear any complaints, so I'm going to assume that you all like meatloaf. So think of the raw meat on the counter. Hopefully your mother's using the proper sanitation things so she doesn't get salmonella or whatever. She's being careful. So the raw chopped meat that she has in a dish is the raw material. The work in process is when she adds the eggs and the breadcrumbs and the seasonings and cheese or whatever your mother puts in there. That's the work in process. It's not done yet. And the finished goods is when she molds it into a loaf and sticks it in the oven. And the cost of goods sold is you guys eating it. So that's when it's available for consumption or available for sale. So think of a meatloaf and you'll kind of understand. So the flow is raw materials, work in process, finished goods, and cost of goods sold. 5 of RA2. The Tomlin Company, I just want to make sure nobody else has to be admitted. The Tomlin Company forecasts that total overhead for the current year will be $15,500,000. When it says forecast, that's synonymous with estimated. A forecast is not actual, it's an estimate. So they're just using a different word. Why? Because they're trying to throw you, but don't get thrown. With total machine hours of 250,000. So this activity base in this problem is not direct labor hours. They're using machine hours. Year to date, the actual, now we're getting into the actual overhead is 16 million and the actual machine hours are 330,000. The predetermined overhead rate based on machine hours is, so what's going to be in the numerator of that equation that I gave you in the chat box? What's going to be in the numerator? Could someone type it in the box for me? What's going to be in the numerator? 15,500,000 or 16 million? The numerator has the factory overhead estimated. Yeah, good. Whoever wrote that. Let's see. That's Leyland. Lee. Forgive me. I apologize. All right. Excellent. What's going to be in the denominator? Anybody but Lee. What's the base? It's going to be an estimate. These predetermined overhead rates is best based on estimates because they have to make decisions before the end of the year. They can't wait for the actual numbers to roll in. They got to make decisions before the actual numbers, so they have to estimate. Can someone copy and paste the equation she sent? It's at the top of the chat box. And I think, if I'm not mistaken, are there dots at the bottom? I think you can click on the dots at the bottom and you could save the chat box. I might be wrong, but I think you can. But if you need the chat box, I can post it on when we're all said and done.
My Zoom crashed and closed, so it won't show me.
All right. So are you back on or are you on the telephone?
No, I'm back now.
All right, good. Let me just make sure there's nobody else to let in. All of a sudden, I can't find the. No, I don't think there's anybody. I think everybody's here. All right. So in this is the equation I put in the box. Predetermined overhead rate equals Predetermined, predetermined overhead rate equals estimated total overhead costs divided by estimated activity base. So what's the estimated activity base? The forecasted 250,000 machine hours or the actual 330,000 hours? Could someone type that in the box, in the chat box, or say it out loud? Which one do you think it is? You have the 50-50 chance of getting the answer correct.
It's the estimated one.
Yeah. How much is that, Myra? Is that Myra?
Yeah, I think you said 250, 250,000.
Yep, 250,000. So therefore, very good. Our equation is 15,500,000. I'm putting in the chat box divided by 250,000 machine hours, right? This is predetermined. It's all estimated in that rate. What does that come out to? What does that come out to per machine hour?
62.
Yeah, good, Harrison. The answer is $62 per machine hour. Very good.
I did not say that.
Who said that? Who said the answer? Jared, was that you? Was that
It
Lee?
was Lee.
Oh, it was Lee. All right, Lee. Good. Very good. Very good answer. At the end of the year, overhead applied was 42. Well, we're going to do an exercise based on this number 6. At the end of the year, overhead applied was $42 million. So they estimate the overhead, what they think it's going to be. But the actual overhead was $40,300,000. It's a lesser amount. Closing over under applied overhead into cost of goods sold would cause net income to do what? Well, if you go somewhere and you expect to spend $100, let's say you go to the nightclub, make a believe you guys should be studying. No nightclubs right now. So if you go to the, I don't even know if they call it a nightclub. Do they call it a disco? I'm so dating myself. What do they call it now? A hangout place? I don't even know what they call these places anymore. Lee, do you know? Anybody? Myra, what do they call it? What do you guys do? Go to Starbucks? I don't know what you do. We used to go to the disco. That's what we did. We did John Travolta moves and all that. And I'm dating myself now. So what I'm trying to say is if you went out to with your friends, let's say you went to a movie and you put in your pocket $20 because you're figuring it's going to cost me $20 for the ticket and maybe $6 for the popcorn. I mean, it's going to cost me $14 for the ticket and $6 for the popcorn, and you're going to drink water because you don't have enough money for the soda. But what happens is you go to the movies and they have a special for people who are students of PHSC and you get a discount. So guess what? You only spend $18. So you are happy because you want go home with $2 in your pocket. So in this case, they expected to spend more than what they actually spent. They're going to be happy, which means there's going to be an increase in their net income. That's what's going to ultimately happen. So the equation they give, and I'll give it to you, is there'll be an increase in net income. How did they get that? They took the applied overhead, which was 42 million. They subtracted the actual overhead of 40,300,000. They come up with 1,700,000, which is an increase. Now, if it was the other way around, where the applied overhead was 40 million and the actual was 45 million, then it would be a $5 million decrease in net income. That wouldn't have been good. Better the managers make a mistake in the favor than the other way around, because then they're going to get they're not going to get in trouble, but they're not going to be, they're not going to be in the doghouse. Let's put it that way. All right. So let's see, what are we up to? We're up to 7. In a job order cost accounting system, the entry to record the flow of direct materials into production is, so here you got the raw materials in this bucket, you got another bucket work in process, and then you got another bucket at the end of the line, finished products. It's almost like an assembly line. So you want to take your raw materials out of the bucket via a journal entry, and you want to put it into the work in process because it's been worked on, but it's not finished yet. It's a guitar, but it's missing the strings. So in order to do that with a journal entry, you're going to debit work in process, because work in process is inventory. What happens when you debit an asset? Does anybody know? What happens when you debit an asset? Does it increase or decrease?
Increase.
Very good, Myra. And we're going to credit materials, another asset. So we're going to reduce materials. So we reduce the bucket of materials by whatever amount it is. And then we're increasing work in process. So the entry is debit work in process and credit materials. And that's on page 52. So here comes 8. We got 3 more to go, and then we're going to jump into a video and the problem, we're done. Which of the following entries would not, NOT, be found on the books of a service provider? So a service provider provides services. There's no inventory involved. If I prepare taxes for people, that's my service. So in effect, I'm not going to have materials. I'm not going to have materials because I provide a service. So the answer is A. a debit to work in process and a credit to materials would not be found on the books of a service provider. And that's on page 64. 9. The direct labor and overhead costs of providing services to clients are accumulated in B, work in process. And that's on page 64. When a job is completed in a service organization, the job costs are transferred to the B, cost of services account. And that's page 64. I'm going to type that in the box. It's called cost of services account. This would not exist in a soup manufacturer. All right, so now we're going to watch a video. I'm going to try putting this in the, I tried doing this before, it didn't work, but let's try it again. I tried copying, pasting this and going straight to the video. So bear with me, I'm going to share the screen, only for some reason I can't find the share the screen. Why is that?
Mr. Feo,
Yeah,
I have a question for you.
sure.
The exam 1 is due Saturday.
I think so. Am I right about that?
Yes, it
Okay.
is. My question is, though, that it does include chapters 1, 2, 3, and 4,
Mm.
according to the syllabus.
All right. Okay, then we'll have to go over the answers to 4 when we meet again on Wednesday then. Regardless of not if it's been assigned. That if that was a mistake, I'll just have to eat that one. All right.
What
So
about 3?
3, we're going to do that on, well, that's not a lot of people. Who's asking that question?
Angela?
Angela, because a lot of people haven't done that yet, so we can't go over the answers
Oh.
tonight. All right.
Okay, I'm
That
sorry.
makes sense to you? I know I'd love
Yes,
to
I'm
go over it.
sorry.
It would, no, no, it's not, you know, it is. I'd love to go over it tonight, but some people are, last to the party. So it's okay. I have to keep track of all this stuff, and sometimes it makes me a little crazy. But we'll go over the other 2 when I see you on Wednesday, okay? And if I don't see you, then that means you'll have to look at the recorded meeting. You'll watch the recording and you'll be fine. Let's see, can I get in now? Oh, it's got too many darn passwords to worry about. Let's try it again. All right, please let me in. Let me go back again. Let me try again. I want you to see this video because it's a good video. If I have to go get what they call my password book inside. Okay, let's see. Oh, I have my cap lock on. You ever do that? You have your cap lock on, you're wondering why you can't get into something? That's why. Because I had my cap lock on. It should work now. So you basically have to study 40 questions. I mean, you got your book too, and you'll be set for the final. It's not like you have to do well, you do have to do some calculations on some of them, but I tried to give you those equations. All right, so first you go into this. I'm going to repeat myself because some of you still don't know how to get into show me videos. So you click on the Cengage Now V2. And then you have to, I click on this because then it just keeps on going. Yeah.
If
You're not sharing.
screen, it's
Oh,
just showing
yeah.
the.
No, thank you. You know what? I can't figure out where the share thing is. How crazy is this? I can't find the share button all of a sudden. Oh, this is going to make me crazy. Let me look here. Let me see. Yeah, all of a sudden I can't find, like I usually have a screen to share. Let me try minimize them. Oh, now I see. I see what happened. The chat box was blocking. I'm not even there yet, but you're right. You can't see. Can you see it now? It's the Cengage See Now V2.
Yes, ma'am.
Oh, good job. All right. I'm glad. That's good that you guys keep me on point. All right. So now, because believe me, it's very easy for me to get off the beaten path. So I clicked on study tools, then I go to this adaptive study plans. I make sure the book is right. We're in chapter 2 and we're going to, there's a couple of show me videos. Look how many there are, but this is the one that I want to show me the factory overhead rates and all this. So we're going to do this. So pay attention because we're going to proceed to do exactly this problem when this video is done. So try to take notes if you have to. Yeah, now see, this is something you should write down because it spells it out and it's nice and bold. You should put this in your notes. Factory overhead costs, what is it? All of the cost of producing a product except for direct materials and direct labor. That's factory overhead. Okay, so that was a very good video. That was very informative. So now we're going to proceed. We're going to proceed to do a problem. So let me
Mr.
bring,
Dale, I'm
yeah.
sorry. Can I ask you a quick question? So the factory overhead, like that applied account is, so does that, because it seems to like have the opposite. So it's not like the balance is like an asset account, but it usually has a credit balance.
No, it doesn't. It depends.
Okay.
Notice the two accounts, one had a credit balance and one had a debit, because what you're estimating might be more than what actually happened, or maybe less. So let's see what happens. Let's do the exercise. It might answer your question. Okay. Maybe when we do the exercise. So everybody, if you have your textbook, good question, Myra. Very good question. Let's turn to page. This book is so heavy. It's like I'm going to get a hernia. Let's turn to page 77 on the bottom. Just let me make myself comfortable here. That's a good question. I will come back to it, but maybe it's going to get answered when we actually do the work. Sometimes when you hear the theory, it's hard to put it together, but oh wow, there's somebody still waiting. Oh my God. You got to come on time. Otherwise you're going to miss the boat. It's like missing the ferry. You ever go take a ferry somewhere and watch it leave the dock, and then you can't, that's it. You got to wait for the next ferry. That's what the thing is here. Got to come on time. You need to, because I get involved in teaching the lesson and I keep forgetting to let people in. So I'm going to share the screen again. Only this time I want to find, hang on, I want to just look for, let's see. Just bear with me. Okay, the worksheet, hang on. Let me open this up. Okay. All right, so new share. How come I can't see it here? My eyes are not so good. Worksheet. Can you see this worksheet up here at all, anybody?
No, ma'am.
All right, let's try it again. Thank you for telling me. Let me try it again.
Still looking at Cengage.
What? No,
Still
we're not-
looking at Cengage. There we go.
Okay, so here's the problem. Okay, so this is what we just watched, the same video. Do you see the setup? They have factory 1 and factory 2. Do you all have your book, I hope? What about you, Dylan? Do you have your book? Oh, I'm glad. Brian, I can't see you. Do you have your book? Or are you looking at a Playboy magazine? What's going on over there? I can't see your picture. I'm kidding. I'm joking. I know we're not allowed to joke. All right, no joking. So Sunday, God, it's really, Sunday, it's hard for me to stay just serious. Otherwise, you guys will fall asleep. Sundance Solar Company operates 2 factories. The company applies factory overhead to jobs. So in other words, just envision that they're going to do these jobs. They want to know ahead of time how much is the factory overhead. They're going to estimate, because they're going to find out after the jobs are done what actually is the factory overhead, but they can't wait for that to happen. They got to come up with a number before the job's over. So the company applies factory overhead to the jobs based on machine hours, and then factory 2, I think it's based on, no, factory 1 is based on machine hours, and factory 2 is based on direct labor hours. So I'd make a note of that. Exercise 2.9, page 77. Factory 1 has activity-based machine hours. Factory 2, activity-based direct labor hours. I'd make a note of that, because then you know what you're looking at. And that's just what we just saw in the video. So 1A, determine the factory overhead rate for factory 1. Okay. Okay, so let me type it in the chat box. Where's the chat box? Chat box. Okay, I got to make it smaller. So factory overhead rate for factory 1. All right. So did all of you write the equation down, or do you need me to type that again? Did you all write the equation, which is, I'll tell you the page again. If I can find it. I think I circled it. All right. Okay, it's on page 55. predetermined factory overhead rate equals estimated total factory overhead divided by the activity base equals factory overhead estimated divided by activity base. Now, what's the activity base for factory one?
600,000 in the machine hour.
Good. So we're going to have 12 million. Very good, Myra. 900,000 divided by 600. Am I right? Am I doing that right? You did say 600,000, right?
Yes, it does.
Oh, okay. All right. Don't mind me. I got a little bit of a brain freeze. Okay. So what's the answer going to be? What's the answer?
21.5.
Okay. So it's going to be 21.50. And that is machine hours. Per machine hour, I guess. Let me say per machine hour. For factory one. All right, so let's go to factory two. Factory two uses direct labor hours. So we're going to use 10,200,000 divided by 250,000 labor hours. So some of you shy people that I haven't heard from, what do you think the answer is to that calculation? You can type it in the box if you don't want to speak. When you have to speak, unmute yourself, speak, and then mute yourself again. But if you have a quiet house, then you don't have to unmute yourself. But if you got mom yelling at dad in the kitchen, then I would like you to mute yourself.
40.8.
Good. Does everybody agree? 40.80. Does that look good? So 40.80. Thank you, Harrison. And that's per direct labor hour. So let's see how we put it into this worksheet. All right, let's see how we do this. Okay, good job, excellent. So I got to put it in edit view, otherwise it won't let me put numbers in. So work in process. Now this is, let me see if I can insert a, what do you call, a row above. Because why do I want to do that? I want to get you in the habit. This is the description. Okay, and this is the debit, which is on the left. And this is the credit. Now, please remember with these journal entries, you have to have debits equaling credits. Otherwise, it's not, it's out of balance, an out of balance journal entry. So here, let's do this part. We know 2150 times 610,000. That's the machine hours for March. So what does that equal? Could somebody calculate that for me? Can somebody calculate that one?
13,115,000.
Does everybody agree with, was that Myra? Myra, was that you? I didn't
Yes,
see.
that was
It was
me.
you?
I'm gonna
Okay.
double check though.
All right. Anybody else? Just double check if Myra's calculation.
She's right.
Good. So
I
then
have it on my calculator, and
Good
it's
job.
right.
Good job, Harrison. All right. So now I'm just trying to get in this box. I don't know why it's not letting me. Oh, so hard.
You're not in the cell.
I'm not in the cell. You're right. And that's the problem. I don't know how to get in the cell. You're absolutely right. That's exactly what I'm trying to do. You're right. So let me I like to line up the numbers. I'm fussy. I don't know why. You know what? I had bosses that were fussy. I'm trying to make it so they like what they call right justified. I don't know how to do it. Let's see. Home. This is right justified. And then I'll make it bold. So this is All right, so this is to record the fact. Let's put the, you know, what do you call the explanation here? So we know what the heck we're doing. So the explanation, guess where I get the explanation from? From what they asked me in the instructions. To record the factory overhead for factory 1. That's it. There's my explanation. So now the work, this one was based on, as you know, a different basis, a different activity based direct labor. So what is $40.80 times 245,000? Olivia, you want to try that one? Because you were the one who kind of brought this problem to light.
Is there a typo in that? The last one was 610, and
610.
this says 250.
Oh, no, it's 245. That's the actual.
Oh,
Okay, actual. Good question. It's
okay.
actual. So when we're actually computing it, we have to actually, we use the predetermined rate, but we times it by the actual hours and the actual direct labor hours and the actual machine hours when we're recording the factory overhead.
It's 9,996,000.
9,900 and what? 96,000. Does this tell me?
Yes,
Okay.
96,000.
No, all zeros.
Yep.
Okay. Okay, great. So let me just make it bold so you can see it. Bold, and we'll left justify it, and then let me copy it and put it here. Okay, and then let's put the explanation, which is,
There's a shortcut for that.
what do you mean?
Control
mean it-
V to paste it.
Thank you. Okay, Control V, I'll have to remember that. Control V. Thank you. And here's the definition or the explanation. What do you think the explanation is for the second one? To record what?
It's gonna be this what it's telling you to do.
Well, it's, okay. And what is that? To record the factory overhead for which factory?
Factory 2.
Very good. Okay. So next, journalize the entries to apply factory overhead to production in each factory for March. All right, let's see. So let's see. Let me see if I have the answer to that one because I don't want to mess up. So let me do another share and let me see if I can find, just bear with me. This is exercise 9. I know you can't see, but just wait, once, just give me a second. I'm just finding it. Just finding it. 2.9. Okay, so now I'm going to do a new share. Let's see. All right. Do you see over here where I'm highlighting in yellow? Can you see that?
Yes.
Okay, good. So let's see. So A was to figure out the rates, and we did that, and you did a great job. Then C was doing the journal entries, and you again did a wonderful job. And then we have to determine in D the balances of the factory overhead account for each factory. So let's make up a T account. And the only way I can do that, let me see. Well, what was in there originally? Let's see. So originally, there was 12,900,000. That was in factory 1, I think. Let me see. Wait a minute. Where are they getting 13? I'm trying to see where they got the 13,115,000. That's where I'm a little confused where they got that number. Oh, okay. So 12,990. Okay. So in the problem, they tell us that the actual factory overhead is 12,990, the actual. So I'm going to highlight that in turquoise. And the actual factory overhead in factory 2, I'm going to highlight in turquoise, is 10,090,000. But if we look up here to what our entries were, we have, this is what was entered as far as the overhead, 13,115,000 and 9,996,000. So in this first case, we have 125,000 credit. And in this case, we have a $94,000 debit. Because these entries are, let me put in a big note here. This is the applied, let me just see if I can get in here later. I got to do view. This is the applied factory overhead. This is the applied factory overhead. So this is what we recorded before we knew what was going to really happen. Applied factory. This should be overhead. So we recorded these journal entries. We estimated. These are estimates. Then when the actual numbers rolled in, we found out that we recorded too much factory overhead to factory one. And we recorded too little overhead to factory two. So we ended up with 125,000 over applied and a 94,000 under applied. So in this case, if we take okay, so does everybody follow that? So this is going to be an increase based on that problem we saw. This will be an increase in net income of $125,000. And conversely, with underapplied, this is going to be a decrease in net income. So what's the overall effect if we put the two numbers together? If we put the decrease together with the increase, what is the overall result? Increase or decrease?
Increase of
Yes,
31,000.
Good, good, good. So the increase was 125,000, and I guess you subtract 94,000. So overall, it was okay. It was an increase of, what did you say again?
31,000.
Okay. Everyone agrees with that number by Myra? So we're pretty good. You know, we may have underestimated one and overestimated the other factory, but ultimately in the long run, we came pretty close. Does anybody have any questions? Does that shed a little bit more light on the over and underapplied? So this is an estimate, but then we, you know, then we have to, where do you think this number is going to go? Where do you think that number is going to get recorded? Where do you think that number is going to end up going? It's going to, is it going to end up on the income statement, or you think it's going to end up on the balance sheet? Because we're going to close this out and start the new year with nothing in factory overhead.
It's going to go on the income statement.
That's right. It's going to go in cost of goods sold. It's going to be part of cost of goods sold. Okay. So now it's 6:21. Anybody have any questions? Is there any other things you would like to go over in the chapter? We could look at another problem if you wanted to. We could look at they had the financial statements of a manufacturing firm. Did we do that one? I think we did that one. Yeah, we did that one. Let's see, job order costing. Is there any other problem or exercise that you'd like to see the answer to? Speak now if you ever hold your peace. We could look at problem 2A unless someone has a better one that they want to look at. the journal entries again. But you know what? It's good to kind of look at journal entries because to me, they're the hardest thing to do. So let's see if I have 2-1A. So here's some journal entries right here. This was, believe it or not, assigned for homework. Homework is not graded. I just graded the first homework because I wanted to see how you did in Canvas, but homework you should do because it'll help you, but it's not graded, except for that one. So this is a company that uses a job order course system, Munson. And they bought materials on account.
Could you
So
make it larger?
I can make it larger, but can you see it? Can you see it in yellow? Problem 16-1A?
It's kind
I
of
mean-
I
hard.
can't see it.
Wait, let me see.
Yeah,
I
that's
got.
better.
I might have to do a screen share. I don't know if you. I guess here it is. Okay. All right. How's that? Is that better? Is that a little bit
Yes.
better? Oh, good. I'm glad. I'm just gonna move it up a little. I want to get it kind of centered. Oh my gosh. All right. There you go. So when we buy materials on account, what are we doing? We're charging it. So it's going to go to a liability. So we're going to debit materials and we're going to credit accounts payable for $225,750. Actually, this is a typo. This should be a 2. They have a typo. So they're not perfect either, the book people. Materials requisitioned 217,600, of which 17,600 were for general factory use. So the work in process, those are the direct materials with 200,000, but some of that was factory overhead, like the glue for the guitars and maybe the shellac for the guitars, you know, whatever else is involved that's not directly attributable to the guitar. And so we would debit those two and we would credit materials because now we're taking it out of materials. They were requisitioned. We're taking this out of materials and putting it into the work in process. We're taking the chopped meat off the counter and we're turning it into a meatloaf. Now C, factory labor used was 680,000, of which 72,000 was indirect. So indirect in a factory is what they call factory overhead. The foreman, the guy who, operates the machines or takes care of the machines. So we're going to debit work in process for 607,700 and factory overhead they told us was 72,300. That's how they got this number. They just subtracted this from this. And it's going to be wages payable because the wages weren't paid yet. They'll be paid next week, hopefully. Other costs were overhead, selling expenses, and administrative. I feel like we did this one. Did we do this one, Lee? Oh, good. I'm glad to hear that. Okay. So we're going to debit factory overhead. They just gave us these numbers. We're going to debit selling expense, which is below cost of goods sold. Administrative expenses, which is below, which includes accountants, salaries, and everything else. And then we're going to credit accounts payable. Then we have prepaid expenses expired. When prepaid expenses expire, that means that they have to be expensed. So they tell us 27,500 of the factory overhead, 8,100 of the selling expenses, and 5250, and then we're going to credit prepaid by adding all these three up. So when we credit prepaid expense is an asset. When we credit an asset, it goes down or decreases. They tell us that there's depreciation for the office building, the office equipment, and the factory equipment. However, the factory equipment, that gets charged to factory overhead. So it's a little tricky. The office building where the people work on the books and everything, that's depreciation expense for 44,500. The depreciation expense of the office equipment, another 16,800. But the depreciation on the factory equipment, that gets charged to factory overhead because that depreciation expense will go into the cost of the product they're selling. Anything involved in the factory and the factory overhead is going to be in that cost of that, whatever this manufacturing, not depreciation expense factory. Then we credit accumulated depreciation buildings and equipment by adding all this up. Then we have factory overhead applied to the jobs. So here's our estimate. So we debit work in process. We're charging the inventory 548,000, and we're crediting factory overhead. So factory overhead applied is a credit. I think, Myra, you asked me if it's a credit. It's a credit because the debit goes to work in process. Then we completed jobs, so we still have this as inventory. Finished goods is inventory until it's sold. Then it becomes cost of goods sold. They tell us it's $1,140,000. We credit work in process because it came out of work in process into the finished good bucket. Remember the 3 buckets: raw materials, work in process, finished goods. Finally, we sold $1,128,000 in cost. I don't know what the selling price is. So we're going to debit cost of goods sold because this is on the income statement. And this finished goods, this was on the balance sheet. So we're moving it off of the balance sheet onto the income statement as cost of goods sold. All right, class. We got 2 minutes left. Any thoughts? Anybody crying in the background there? Are you all right? Harrison, you okay there? Does it make sense to you? It's a lot. It's a lot to digest. But you know what? I think you guys can handle it. That's how I feel. I think you guys can handle it.
Could you
All right.
to the top for a second for me?
What do you need?
Just scroll to the top for a
Sure,
second.
of course I can.
Thank you.
I got to go slowly. I always have a habit of scrolling too fast. I might have to minimize it just a little bit. Now I'm thinking it's too small. How's that look? Can you see that, or is that too small?
Yep, that's good. Thank you.
Oh, you're so welcome. Let me take the yellow off because I think that's distracting. I wonder if I can blow up this up. I always like to experiment, but I shouldn't do that, but I like to. No, see, that's too crazy. That might be a little bit better. Just have to kind of stretch out the, no, see, then it doesn't take everybody. You have to kind of go one by one. So Myra, do you still have your question that you originally posed?
No, I think I understand it now. I was more just thinking like, most, like if it's an expense account, it usually has a credit balance. If it's an asset, it's usually a debit balance. So I was trying to put it in that bucket, but I think it kind of acts like both depending on the situation. So I just have to figure that out.
I know. It's almost like you got a good point there. It's almost like net payroll. There's an account called net payroll, and they put the credits in when they enter the journal entry for the payroll, and then when the checks are paid, they put it in as a debit. And the whole idea is that account should be zero when all's said and done. It's almost like an exchange account, this factory applied, because when all is said and done, you have to end up with zero. It's got to be wiped out. And how do we wipe it out? Whatever's in there at the end gets charged to cost of goods sold. Because I'll be honest with you, let me see, factory overhead. It's definitely part of the income statement, and it's definitely part of expenses. Okay, let me see. I want to see if I could see any definition that might make it more clear. Sometimes the book has a way of just clarifying things. Let's see if there's a definition for factory overhead. Okay, factory overhead, of course there isn't. Well, they have over-applied factory overhead, let's see, there is a definition for those two types. Let's see, 57. Let's see what they say. It says it's on page 57. Let's see what they say. And that'll be our closing. Okay. So they say, oh, I'm on the wrong page. So they tell us that in the middle of the page, if the applied overhead is less than the actual overhead, the factory overhead account will have a debit balance. This debit balance is called underapplied factory overhead or underabsorbed factory overhead. The actual and applied overhead usually differ because the actual overhead are normally different from the estimated overhead, depending on whether actual overhead is greater or less than the applied overhead. The factory overhead account will either have a debit or a credit ending as follows. To summarize, the factory overhead account is increased for actual overhead costs incurred or decreased for the applied overhead. It doesn't really tell you what the account actually is.
That did help though. What page was that on? Was that in the
Yeah,
glossary?
57. Take a look at 57, everybody, when you're home and when you're able to take a look at it. Because maybe if you just examine everything, because they have a journal entry here. There's like a count factory overhead pictorial. So that might help. If the balance is either over or underapplied becomes large, the balance should be investigated. For example, a large balance could be caused by changes in manufacturing methods. In this case, the factory overhead should be revised. You know, the way they determine it should be revised. Do they tell us where it goes? That's what I want to hear. It goes to cost of goods sold, but I'd like to see that. Oh, yeah, here it is on page 59. If there's an ending debit balance in underapplied overhead in the factory overhead account, it is disposed of by the following entry. Debit to cost of goods sold. So yes, it goes to cost of goods sold as a debit. And the explanation is transfer of underapplied overhead to cost of goods sold. If the ending is a credit, then cost of goods sold gets credited. But either way, cost of goods sold is what they use to get rid of the, you know, the that over application or under application. All right, scholars, I'm going to say goodnight to all of you. Have a wonderful evening and be good, and I'll see you Wednesday, okay? And
Thank
we'll go
you.
over, oh, you're so welcome. We'll go over RA3 and 4.
Have a good night.
Good night.
Will we be able to print RA3?
I would imagine so.
I can't right now. It won't let me. It says it's locked because it's closed.
You did tell me it was locked, and I believe I opened it, but I'll take another look at it. I don't know if there's a problem with it now.
That's what I meant when I emailed you about RA3. It was that not asking for more attempts or anything. It was that we couldn't see the actual quiz after we took it.
Wow, that's strange.
So
Yeah,
we
it
can't
closed
see
right up.
Yeah, you know what? I'll look at 2 and then I'll compare it to 3 and see what's different. But I did.
Yeah,
I
because
did.
as of right now, if we were to go over RA3, none of us would be able to see it.
Yeah.
Wow, I got you. All right. Okay. I will look at that.
Thank you.
Oh, you're so welcome. Bye-bye.
Bye.